Good afternoon, everyone. My name is Dominique Velger. Welcome to our Money Management for Elders and Their Caregivers. Joining me today are my colleagues, Sarah Scruggs, she's our Community Engagement Specialist, as well as Migdalia Gomez, AVP of Community Engagement Specialist. Welcome. We are happy to have you here today with us. And we want to get started. If you grab your lunch or your drinks and enjoy this afternoon with us. To get us started, I wanted to talk to you about the difference between the credit union versus a regular bank. So we are a not-for-profit, basically HUECU. We put our members first in every step of the way. Like we want to offer you any better value that's out there. We want to make sure that you get all the savings and benefits on loans. So say, for example, you go shopping at a mortgage company or another big name bank, you'll see that a lot of times their rates are probably a lot higher than ours. So our goal is really to save you money, and you take that savings, you can, do whatever you want with it, like pass it on to your kids, put it in your bank account or your savings. So our goal is really to just kind of save you money, save, save, save. We want to make sure that you have the lower fees. And we want to make sure that a lot of the services that we provide to you are free and you get all the perks and benefits of being a member. And also, you can be a member even if you're no longer affiliated with Harvard, even if you don't work at Harvard anymore. So that's actually a really good deal. We also offer you guys better business model in comparison to some of the big name banks. And of course, we're better for the community. So I'm going to pass it on over to Migdalia, and after she speaks, Sarah will then speak. Thank you so much for joining us here today.
Thanks, Dominique, and thank you everyone for joining us today. So today's presentation, we are actually going to go off camera just to make it so that you can focus more on the slides and just be able to have access to all this information. But we are here and we do have time for questions throughout, but we will be using the Q&A today. So if you do have any questions, please use the Q&A. And just to make sure that you're comfortable, I know mostly all of us use Zoom for work, but just to make sure you're comfortable, please let us know in the Q&A where you're joining us from, and we'll get started with today's presentation. So in the Q&A, you could just let us know where you're joining us from. Thank you. Wonderful. So as Dominique mentioned, we are talking today about money and elder care, and I'm going to say caring for your elder. And I know for some of you, you may be joining for yourself as you age. For some of you, you may be joining because you're caring for a parent or you're caring for someone else. So I'm just going to refer to caring for the elder. It could be, again, caring for yourself, or it could be caring for someone else in your family, but just so it's a little bit easier. Awesome. I'm seeing that we have folks from Waltham, Somerville, Randolph, New Hampshire, Brookline. Someone's in the office, someone's the School of Chan. Thank you so much for letting me know. I really appreciate that. And just like you let us know where you're joining us from today, anything we can clarify, please let us know. Quincy, Cambridge, Watertown, wonderful. Thank you, everyone. And we are going to today talk about the financial piece of elder care. And that is really where our specialty is. That's where we're going to focus on. But we want to start off just by taking a moment to acknowledge what we're speaking of. I mean, we're all going to age. We're all aging literally every day, every second. So just want to take a moment to take that moment to realize that whether you're caring for yourself or you're going to be caring for someone else that's aging, just think about how that will feel. Think about how it feels to get older. Sometimes our bodies and our minds just aren't as strong as we age. And there's a mental piece of grieving, losing our independence. And there's a lot that comes into play with aging. And it's not just the financial piece. And in fact, by 2030, so in the next couple of years, 1 in 5 US residents will be 65 or over. So a lot of our population, we're in a position that our population is aging. And there's a lot that goes into play when it comes to the medical piece. We're not going to speak about that because that's, again, not our specialty, but we are going to provide resources. And then there's going to be the emotional piece. As I mentioned earlier, consider what it's going to be like as we age. we're grieving our loss of independence. Our bodies, our minds aren't sometimes as strong as they used to be. Not for everyone. I know some people that, get really fit when they age. So you never know, but just being mindful that we want to make sure that as we are talking about today's topic, we remember that we're speaking about each other. We're speaking about our loved ones. We're speaking about people. And ultimately, that is extremely important to remember that we want to be encouraging. We want to be supportive. And we want to make sure that we're always listening to each other and listening to what are the needs of the elders? What are our own needs as individuals? There's definitely going to be times that on both sides, whether as a caregiver or as an elder, it can become mentally exhausting. And we want you to know that there are many resources to support you, just as there are medical resources, there are also emotional well-being resources to support. We'll talk about some benefits. We have awesome benefits through Harvard, so we'll speak about those. We'll also speak general, recommend reaching out to see what your city offers. Sarah will share some state supports in Massachusetts, but if you're in a different state or the elder you're caring for is a different state, we'll also speak to how you can find some of those. And then some religious groups may also offer some services. But as I said, we're going to really focus on the financial piece because that is, as Harvard's not-for-profit financial institution, that is where our expertise lies. So I'm going to start off with, there is going to be a lot of information. And one of the pieces that I want to focus on, actually, before I go into estimating financial needs, let me take a moment here and I want to give you some of the emotional support resources that are available through Harvard. Actually, probably the best time to mention it. So through Harvard, we have Care at Work, and this provides a lot of different resources for medical and emotional and even financial. So Care at Harvard or Care at Work, and it's through the Harvard HR website through Harvey. Just go to, Sarah's going to put these links in the chat, but essentially it's through Harvey/Care at Work, and they offer adult care services. They also offer the self-care and senior care solution. So this is free access to connecting you with a professional that can help you with your specific needs. And this is all available to us as a benefit of working at Harvard. So even though we'll break down some other resources that are specific to maybe just the financial pieces, Care at Work gives us resources for all of these. So it's a great resource. And if you haven't signed up for it, you do have to sign up for it. I encourage you to just check out that link that Sarah put in the chat. And it's really great because they also offer referrals and access to services across the country. So whether your elder is in Mass or they're in a different state, or whether you move in the future, this is going to be extremely helpful because they offer a lot of different services. So you name it, they offer it. It's a really great resource and it's part of our benefits. So that is one way to help sort of reduce some of the costs, to take advantage of those free resources that are available to us. And we're very fortunate to have many here at Harvard. But one of the things that I wanted to start off with is really the estimating the financial needs. As we know, or for any of you that maybe have attended one of our presentations before, we focus very strongly on budgets. Budgets are really a foundation. We're going to talk a lot more about other pieces, but really a budget is the foundation for a lot of these things. Now, estimating our financial needs as we age, it can be very challenging when we don't know where to start. So what we're going to do is I'm going to provide some starting points, but as always, money is personal. Your situation may be different than mine. If I'm caring for my mother and not my father, that could be a different cost. If I'm caring for my mother and father, that could be different. If I'm caring for them on my own budget and not with a partner, that could be different. If I don't have children that are caring for me, those costs may be on me. So everyone's situation is different. So we're just going to focus on averages and empower you to adjust these as necessary for your situation. But one of the starting numbers to try to estimate what the financial need will be of the elder is to plan about 80% of their expenses at the age of retirement, or of their income at the age of retirement. Now that 80% is, again, just an estimate to get you started. But ultimately, the higher earnings, the less close to that 80%. So for example, if someone's income range at retirement is about 50,000, then that 80% is going to be more applicable. But if someone was earning more than 120,000 when they retired, that was their income, they probably would need about 55 to 65% of that income. The takeaway though is everyone's situation is different. So you want to, it's a good starting point. Now, a lot of the expenses, unfortunately, as we know, as we age, a lot of those expenses are going to be medical. In 2021, for a retired couple age 65, it was estimated that after tax, this is some research that Fidelity did, they would need about $300,000 saved to cover medical expenses in retirement. And I know that that number can be alarming, and we will talk a little bit about some ways to pay. The reason that we'd like to start with these numbers is just to get us on the same page as the importance of really planning for this. And that's why you're here. And that's why also, if these numbers can be alarming or can create a little bit of stress just thinking about it, remember, you do have those resources at Care at Work, and we have others through EAP that can assist us. And I did see that someone in the asked a question if Care at Work is available to retirees. I do not know, but we will check with our friends in the benefits office and then get back to you all in the follow-up email, which we will be sending an email with this information so you have the slides and the recording. But thank you for that question, and we will find out. And if there is someone from the benefits office on, feel free to just let us know through the Q&A if Care at Work is available to retirees. Now, the figure of 300,000 during retirement, to break it down a little bit, Fidelity also did additional research, and they said that people that are around age 65 to 74 are spending about $6,000 in healthcare expenses. And then as we age it to 75 plus, it's still around that same range. So it's about $6,000 per year. And of course, we know our lifespans will vary. So that 300,000 is a good average starting point. But a lot of the times those medical expenses, the bulk of them tend to go into different categories, and about 40% of our medical expenses, 39% of those medical expenses are based off of Medicare costs. And I'll talk a little bit about that. About 44% include co-payments, co-insurance, deductibles for doctor's visits. And then about 17% of those medical expenses are generic branded drugs or specialty medication. So this is just to give a little bit of an idea as to where and how those medical costs add up. I know for myself, you go to the doctor's visit, and usually it would, you may have a co-payment, then you go to another doctor and there's a specialist, et cetera. And I'm getting a couple of questions. Yeah, this information is through the Fidelity Retiree Healthcare Cost Estimate. So we can share that link, but a lot of this information is through Fidelity. And there are calculators that Sarah will share in the upcoming slides, and I'll share, that will be more beneficial probably than the general numbers. It definitely is helpful to have a general idea on the numbers, but everyone's situation will be different. So we'll share some estimates, some calculators that you can use to estimate your specific numbers. Now, in addition, for entertainment and travel costs, that can vary, as we know, depending on each person and what your lifestyle is going to be. Housing, for most individuals as they age, housing costs tend to be less. However, there are some that may decide to relocate, and it could be less because they're downsizing their house. But for others, they may choose to stay in the same home, but may need to do renovations. So they may need to add ramps to get in and out of the house. They may need to add if the family was used to living on the second floor, they may need to add equipment to be able to move someone up to the second floor, or they may need to change the layout of the house. So it really will depend on folks' specific situation, but these are all costs to start considering and start having those conversations. And then for funeral costs, Just as an estimate, in Massachusetts, it's about $10,000 for funeral costs, but that does vary per state. For some states, like in Florida, it's less expensive. It's about $7,600, which is still still expensive. It's still a cost to plan for, but just know that on average, it's about 8,000, 8 to 9,000, depending on which state you're living in or the elder that you're caring for is going to be living in. Now, when it comes to paying for these expenses, there are different sources. And this is where having those conversations with the elder, having the conversations with the family members or friends, those that will be caring for the elders, will be helpful as to what are the expectations. It is many times the stress of managing for an elder, it can be not only because it can be overwhelming. It's an overwhelming process. Then you add the financial piece to it. You add people having different expectations. And we always want to recommend having a conversation. And there are times that it may be beneficial to have someone else lead that conversation. And there are resources that can help. As I mentioned, through Care at Work, there are counselors that can assist through this process to try to have the conversation of what is the plan? Who is going to pay for these expenses? What will be the breakdown? And is it out of savings? Is it going to be current family members or friends that are taking on loans to help pay for these expenses? A lot of times folks will think, well, we have assistance through the government, but that may not be enough. For some accounts or some things to start planning for, if you're able to, or if you qualify, especially for the medical costs, there are health savings accounts, HSAs, and these are accounts that you can put money into pre-taxed. And then any funds that grow, and this money is invested, any funds that grow, you're able to withdraw those funds without paying any penalties if they're used for qualified healthcare expenses. Now, these HSAs or health savings accounts are available for folks that are in high deductible plans. So it may not be available to everyone, but I know we do offer them here through Harvard. But it's also maybe not, even if you don't qualify, maybe the elder or the partner of the elder, there may be someone else that may qualify. So just keep in mind that as we're going through these, may not want to rule something out if you don't qualify yourself, because again, it could be the partner of the elder, it could be the elder, especially if they're still working. And for those high deductible plans, there is a limit into how much money can be contributed each year, and it does vary year to year. So for 2022, someone who is in a high deductible plan can put aside $3,650 for themselves, or up to $7,300. So if you are in a high deductible plan, do qualify for that HSA and are able to put those funds aside, thinking of that is money that can grow and can assist with these costs once the elder is in need of them. And as I said, grows tax free. So that's really the benefit of those plans. Now, a lot of times folks will think of Medicare as being able to cover a substantial part of medical expenses, but unfortunately, the reality is doesn't fully cover everything. There are a lot of things that Medicare will not cover. It doesn't cover long-term care. It doesn't cover dental care or most dental care, eye exams, dentures, hearing aids, foot care, cosmetic surgery. So there are a lot of things that are not covered. Mostly what Medicare will cover though is hospital costs. So that's Medicare Part A. It covers hospital costs, but it only covers that after you meet a deductible. And then for Part B of Medicare, it will cover certain parts, certain medical expenses, but you need to pay a premium to get that coverage. So you may not be able to qualify for that coverage unless you get supplemental insurance. And that supplemental insurance is usually called Medigap. And that's just what people call it. It's not a Medigap insurance. It's just covering the gap between what Medicare covers. Now, depending on the elder's finances, they may qualify for mass health and they may not have to pay, or another health plan in a different state, and they may not have to pay a premium to get the additional cost or medical expenses covered through Medicare. But for folks that do have to get additional health insurance to help cover the gap of costs not covered by Medicare, that premium could be about $163 per month. So as we're thinking of building those estimated expenses and trying to build that estimated budget, that is one to start considering. That yes, there is Medicare, which we become eligible at age 65, but it's not going to be 100% coverage. We may need to get another insurance to cover whatever Medicare doesn't cover, but we need to pay a premium, a monthly amount. Again, average is about $163 a month, but it does vary based off of your financial situation. And that will help cover other expenses. I know that there's a lot that goes into Medicare, and we don't have that expertise. We're not going to be able to go into full detail, but there are lots of resources, including the Medicare website, that provides a really good breakdown of this information. And if you leave today's presentation with a list of, oh, I need to look into that, I need to look into this, that is great. That is what we are here for. We're here to help you think of things that maybe haven't fully come up, or maybe it's time now to dig into them a little bit deeper. And I'm just seeing a couple of questions that have come up. Health savings accounts, if you are eligible for them through us at Harvard, you can contact the benefits office and see how you would sign up. I think you would have to do that during open enrollment, but I would just contact the benefits office. And then if you are looking for a health savings account outside of Harvard, if you're not a Harvard employee, then there are many different resources online, but I would first check with the employer that is providing that health savings account. Thank you for that question. And then another government assistant or government program that assists in a good amount, but maybe not as much as we would love, and even probably not as much as we would love, is Social Security. I'm sure you've heard of Social Security retirement benefits. I've definitely been in the news recently, and I don't think that's going to change until maybe the program changes. So we'll keep hearing about it. But many times, just for planning purposes, we may think that the amount that we'll receive for Social Security may be enough to cover, but the amounts really will depend on when you take on your retirement benefits. Now, to be eligible for Social Security retirement benefits, there are different retirement ages. So for full retirement age, for some of you may be different than the full retirement age for some of me, for some of us. But you can take those benefits before you reach that full retirement age. And that full retirement age is based off of what year you were born. For most people, it's 67 years at this time, but there are some people that it could have been a little bit earlier, especially if they were born a couple of years before we were. Now, if I reach my full retirement age, and let's say it was 67 in 2022, I would be eligible for $3,345 a month, assuming I qualified for full retirement benefits, or $40,000 a year. So that's just to give you an estimate. If I am my full retirement age, I apply for my Social Security retirement benefits, I'm looking at about $40,000 a year, which is a good amount of income. But depending on where we live, especially for us in New England, especially in Massachusetts, it may make things challenging if that is what we're using to cover our entertainment, cover our home, cover our healthcare costs. Now, with Social Security retirement, you can delay and not take the funds out your full retirement age. So if I wait a year, I can get an additional 8%, and it essentially increases. You do have to take them by age 70. But if I waited until age 70, and let's say I turned 70 this year and took out my full retirement benefits, I would be eligible for $50,000 a year, $50,328, or an additional almost $10,000, additional $10,000, because I delayed my retirement I delayed when I claimed my retirement benefits through Social Security. For some of us, though, that sounds like a great, yeah, an additional $10,000 definitely seems like it would be worth it. But if I'm on a tight income, I may not be able to do that. I may not even be able to wait until my full retirement age, which means that I may need to take my retirement benefits as the earliest that I could, which would be 62 years of age. So for some, if you take the retirement benefits earlier, that is going to mean that your monthly amount will be lower. So that means I would be getting $28,000 a year based off of what retirement benefits are for 2022. So if I get my full retirement benefit, I would get $40,000 a year. If I claim them earlier at 62, I would get about $28,000, so a $12,000 difference. Or if I wait until 70, that's an additional $10,000, or then it would be at $50,000. This can be tricky and challenging because we don't know. There are many schools of thought. Some people will say, well, I would rather not wait because I need the funds now. Some people are like, well, no, I can live off of my other retirement funds that I have, and I'm going to wait. This is where we recommend definitely speaking to someone, a financial professional. And someone asked if these are Social Security benefits before taxes. Yes, this is the gross Social Security amount. And Social Security benefits can be taxed. It does depend on a couple of different factors, but thank you for bringing that up. Yes, these are the gross amounts before taxes. But we do have different resources that are available. And as Harvard employees, you can contact TIA. There are resources through them. You can actually speak to someone and talk about your specific strategy as you age, and when will it make sense to take the funds. Or if you're caring for an elder, if they do have retirement funds set aside, I would have them contact the retirement advisors and have these conversations to understand what is the best strategy. What should I do given this situation? Now, other pieces or other costs to consider: long-term care. There are long-term care insurance or premiums that you can purchase. And essentially what long-term care covers is if an elder has to go into a nursing home, home health care, personal or adult daycare, anyone that's 65 or older, or if they have a chronic or a disabling condition that would need supervision. Now, with long-term care, the way that works, it's very similar to life insurance policy, where the younger that you are, the less the monthly premium is, and typically the more coverage that you will receive. Now, with long-term care, just to give you an estimate, as we're talking about numbers and what are these expenses going to be, if someone is 60 years old, they're going to be paying about $160 a month, and they could get up to $2,100 a month in coverage. Now, if someone waits until they're 75, that same coverage could then cost $726 a month. So this is where sometimes it may make sense to purchase the care policy if you are earlier on, but not everyone it may not make sense for everyone to purchase these types of policies. And we do have some resources that can help you have a better understanding of, will it make sense in my situation? Here is one of the resources that we have for you, especially I know there were a lot of folks that had questions on, well, what are some of these stats? Like, this is a really good website, and I actually would recommend here because you can get a better idea of what are the resources near you. And you can also they have also calculators on estimating costs. And this is through the National Council of Aging. And this website specifically is the benefits checkup. And what I really like about this one is you can check benefits regardless of where you live. You can just put in the zip code where you or the elder lives. And also you can then go onto this website and estimate what those costs could be, in addition to what are the benefits that are available. So I know I talked a lot about Social Security, a little bit about Medicare. You can get ideas of other benefits such as housing and other just tax, medical, and other medical benefits that are available to assist. Now, other pieces, as we talk not only about the financial piece, we want to make sure that we also talk about just the paperwork part of it and knowing what accounts are open. As we age, we can have multiple retirement accounts, especially if you had multiple employers, or maybe you had a savings account in one town and then you moved and forgot to close it. So it's really, whether as we age, we just accumulate more accounts. It's just whether it's a retirement account, whether it's a credit card. So just want to make sure that you're keeping track of what accounts are open, that you're helping the elder. If you're not quite sure what debt is out there under that elder's name, definitely making sure you pull a credit report, have a good understanding of what have they co-signed. Sarah's going to talk shortly about scams and frauds, and she'll get into more of how to protect an elder when it comes to scams and fraud. But unfortunately, some of the things we've seen, sometimes family members or those that are close to an elder will take on debt under the elder's name and put them as a co-signer, and that elder may not know. So it's really important, if you're caring for an elder, want to make sure you're pulling that credit report constantly and making sure that those accounts are indeed for that elder. Then there are different account ownership levels. I cannot go and access any of your accounts because I am not an account on any of your accounts. The same is going to happen when I have to care for an elder. I won't be able to access my parents' account unless I am part of that account, unless I'm a joint signer, or if I maybe have power of attorney. And there are many different levels of power of attorney, but essentially what it does, it gives permission for you or for someone to act on behalf or act for another person. So my parent can give me power of attorney, and there are different levels. It could be a durable power of attorney, which means it's essentially forever. It could be springing, which means that it springs into place when a certain act occurs. So if they were to become sick, it's part of the power of attorney documents, what that springing action that would activate it would be. It could be a medical, but essentially I could be the power of attorney for my parent, which means I could sign for them. I can open accounts for them. I can close accounts, but there are different levels. Now, we understand that it can be tricky, not knowing where do I start? How do I get a power of attorney? What about estate planning? Who are the people I need to work with? So we have a lot of great resources, and I'm very fortunate, as I said, to work here at Harvard because we have a lot through Harvard. And I'll share some of those resources with you. But I think what I want to start off with is making sure that whoever you're working with, you as you are the elder, whoever's on that team that's going to support that elder as they age, you want to make sure that they're fiduciaries. Unfortunately, not everyone has our best interest at heart, and there are people that are looking to make money. There are people that are looking to make a profit and aren't necessarily invested in what is best for that elder. Fiduciaries are individuals that legally have to do what is best for the elder, or not just elder, it's for anyone. There are fiduciaries in multiple fields, but they have to do what is best for that individual, regardless of if what is best for that individual isn't as profitable for that professional. So want to make sure as you're building your team, are they fiduciaries? Now, for estate planning, you want to make sure you're working with an estate planning lawyer, someone that has that specialties, just like we wouldn't want to go to an estate planner to maybe do our closing, to be our real estate attorney. We want a real estate attorney who knows that industry. We want an estate planner who knows estate planning, just like we want a hand doctor to know our hands and we want a foot doctor to know a foot. And we want special folks that specialize in their different areas. For estate planning, about 60% of Americans, we don't have a living trust or a will. And I know that can be confusing. Where do I start? How do I do that? Well, one of the things that we have is through the Employee Assistance Program through Harvard, through KGA specifically, we can talk to an attorney for free for up to 30 minutes. And we can just get general counsel, general information. And if we are referred to an attorney through EAP, we have 25% discount. So that's one option that's available to help sort of with the estate planning piece of it. But then also, if you as a Harvard employee are enrolled in supplemental life insurance, we actually have access to free will preparation or estate planning preparation. And all of this is available through the Harvey website. And Sarah's going to be putting some links in as well. And then, so we have EAP, which is available to all of us and those in our household. So keep that in mind. It's not just for you, it's those in your households as well. So if the elder that you're caring for is in your household, they may qualify for these services. They would qualify for these for EAP as well. In addition, remember, it's not just your household. If the elder has multiple children that are caring for them or other individuals, have those individuals find out what resources are available to them for free. Because remember, this is a team effort. We're working as a team to provide the best care for our elders and for ourselves. Now, that EAP, everyone has access to that. Then you have, if you enrolled in the supplemental life insurance, you have access to the free estate planning. And as I said, Sarah's putting that put that information in the chat. But then if you purchase Harvard's legal plan, you also have estate planning through that. So there are many different resources that are available through us here at Harvard. But know that in addition to ours, check with your other folks. And I think that is all that I have for right now. I'll turn it over to you, Sarah. And I know that some questions are coming in, so I'll try to answer some of those as well at the end.
Thanks, Magdalia. Hello, everybody. Good to have you here with us. And I am the person who's been putting all of the links in the chat. Know that you can access these, and I believe that you should be able to download the chat as well with those links. But like we said, we will be sending a follow-up email with the presentation, as well as a lot of these links that you have access to as a Harvard employee. And like Magdalia said, I highly recommend reaching out to family members or other caregivers along with you who may have access to other benefits as well, because each benefits package is different, right? So I'm glad that you could be here with us today. And I'll talk a little bit more about financial abuse as well as scams and fraud. And I like to start off my section by saying a lot of the information we're giving today is good information for anyone, but I think particularly my section on scams and fraud, as well as financial abuse, because these things can happen to any of us. And I wholeheartedly believe that having more information gives us a lot of power. Knowledge is power, especially when it comes to things like scams and fraud and things to do with your money. And so talking a little bit more about protecting elders from financial abuse, what are some things that we can go ahead and do? And this list really does give a good idea of what are some first steps for you, but some stats that I do want to talk about a little bit just to give you the landscape that we are working here in the US with. Last year, $36.5 billion was taken from elders, whether that was through financial abuse or through scams and fraud, which is, I mean, just a humongous number, right? And so many, about 80% of elders and those who are older in our country will be at least tried to be scammed from money. And so it is important that we are made aware of this and that we have these open conversations with them about how we can protect ourselves best. And to be honest with you, a lot of these things are some things that we can probably do today, make those changes today or this weekend coming up. Setting up account alerts is something that we recommend for every member at the credit union, whether they are 22 or 62, right? So this is something that you can do through your settings in online banking, whether you're a member at the credit union or not. Most online banks at this point do have the ability for you to set up account alerts, which means that anytime there's a transaction that's made, you are aware. And this is especially important if in the past, you know, your information has been compromised in some way, or you may have been a victim of a scam or a fraud. Setting up a credit freeze is something that I think is really important for elders in particular. More than likely, your elders in your life are not going to be applying for credit cards or applying for new loans. And so they won't need access to their credit lines. And so what a credit freeze does is it sets up a time for where you cannot apply for any new credit unless you open the credit freeze back up. And you would open the credit freeze back up through a PIN number that you would have access to, and that is all. So no one could access your line of credit without knowing that PIN number. And this can keep a lot of, because I will be honest with you, a lot of elders, because they aren't normally checking their credit or applying for a lot of loans, a lot of them are victims of identity fraud in that way. And so it is important that we make sure our credit is safe and sound, and you can just set that credit freeze on each of the credit bureau's websites. And if you type in credit freeze on Google, you can also find the next steps for that. Reviewing and shredding any financial documents that are no longer needed. And if they are needed, making sure that you put them in a safe place, whether that be a safe deposit box at a bank or a post office, somewhere that you know is safe. Also uploading them online and making sure that they're in a safe, password protected area. That can be a good thing to do. But we shouldn't just have good financial documents with information laying around, especially if you have maybe caregivers who are coming in and out of the elder's home often. Protecting your personal information, one of the best ways to do this is to make sure that any Wi-Fi network is password protected. Like I said, a lot of this information is good for everyone. And this is one of those things I recommend for everyone. You should not be on Wi-Fi that is public and then checking your bank accounts or your credit or anything of that nature. If you're putting in sensitive information online through public Wi-Fi, a lot of people have much easier access to that rather than if you're using protected Wi-Fi. So make sure you set up protected Wi-Fi. And we'll talk a little bit more about protecting your information on the phone during our scams and fraud portion. Don't rush into any financial decisions. Unfortunately, how a lot of people are forced into a system or become victims of financial abuse is because they're rushed into these decisions. Because a lot of us, if we were to take more time to think about, okay, this is what they're actually asking me to do, does that make relevant sense to my situation or to what they've described to me? And more than likely it doesn't. And so no bank or credit union or financial institution will say, you need to give me all this information right now. And if you don't give it to me now, something bad is going to happen. And unfortunately, that is how a lot of people are abused in this way and become victims of this type of abuse. Signing up for FTC fraud alerts in your area. If you go to ftc.gov, you can sign up for these fraud alerts and it will let you know via email if you have a lot of fraud going on in your area or if there's some large news case that you may need to be aware of. And this is really helpful to sign up for where you are, yes, but also where that elder you may be caring for is. And I just wholeheartedly recommend if there's new information about any type of scam or fraud or phishing attempt that are out there, that you are made aware of it so that you can help protect yourself or your elder as best as possible. What are some signs of elder financial abuse? And a lot of times, this is unfortunately the issue, but 70% of the time that elders are financially abused, it is by someone that they love or that they know. And that is really difficult to, I think, come to terms with as we think about caring for our elders, is that unfortunately financial abuse happens by those closest to us. And it's extremely troubling across the board, but these are some things to look out for. If you realize this is happening with your elder in your care, it may be time to start having a conversation about something. Unusual ATM withdrawals. if you or your elder don't normally go and withdraw a ton of cash from the ATM, and then they start doing it after maybe talking about a request from someone that they need money or something of that nature, this can be a pretty telltale sign that they are in a financially abusive relationship with somebody. Purchasing of gift cards. Um, Gift card scams are extremely common in our world today. And so I want to make sure that you all know that purchasing gift cards means that you can't take them back. So you can't recover those funds. And so that's why they are so popular, unfortunately. Unplanned wire transfers. As a financial institution, we do see this. Whereas somebody may be scammed online or on the internet to send somebody money because they may be in trouble or maybe they need to get somewhere. And then they end up wiring that money and may believe that it is necessary and needed. But unfortunately, that wire cannot be returned back to them. And so just keeping up with these things is really important. Any unpaid bills, if you or your elder normally does pay our bills, but then unfortunately something prevents them from doing that, just check in and make sure things are going okay. Make sure they have access to their accounts, make sure they know how to access those accounts, and make sure that they know where to send that money specifically. Even helping them set up bill pay on their online banking platform may be a great way for them to control this so that they're always able to pay those bills. Feelings of anxiety or feelings of rushed decision making around finances is almost never a good thing. I think we all know from experience, if we take a day to think about things, more than likely we're in a better headspace to make those big decisions. And that is the case with financial abuse, unfortunately. They're playing on our emotions, right? When we are victims of financial abuse, because they're saying, I need help right now. And because we're caring people, we want to help in any way we can. And so that feeling of anxiety or rushness does happen quite a bit. Alterations of wills, power of attorney or trusts. This is normally done by those in our closest circle, unfortunately. Maybe it is someone who is in need of some funds. And so they talk an elder into, reviewing their will with them. And this is why it's so important to have a fiduciary when it comes to things like lawyers or, folks who are working on money, CFPs, those folks really do need to be fiduciaries because they want to have your best interest in mind. What should you do if you suspect elder financial abuse? The first thing you need to do is speak with the elder. If you are someone who is going through financial abuse, speak with a trusted individual, whether that be, maybe it's somebody at your local financial institution. They are trustworthy folks to have a conversation with about this. We have conversations with people all the time about these types of things, so that we can help them make the best decisions for themselves and their money. But speaking with the elder about this and getting their consent to understand everything and what's going on, making sure that you're treating them like a human being, right? They are still a person, they're still an adult in this situation. And we have the ability to ask them questions, to talk with them about this, to talk them through it and hear where they're coming from. You should report any potential abuse to their financial institution, lawyers, others in their network, because you do not have to have consent from the elder to report it. To go any further with it, you do have to have consent from the elder, but to just report it, you don't have to have consent, because this helps keep other people safe as well. And so it is really important that you let people know about this. We've had situations with the credit union where children have let us know that something has happened, and we are able to then be on the lookout to keep the safe eye for that person. So contacting your local authorities and social services is also important so that if there are any other reports of this type of behavior, they're able to hopefully find the source of this abuse, and they're able to help the victim in these situations, and continue to look out for the victim and everything. Like Magdalia said, we've gone through, just a ton of information today, and we still have a couple more slides, so I don't want to let you go just yet. But if you have questions, I do ask that you start putting those in the Q&A feature so that we can take some time to answer those at the end of our presentation. These are a few websites for national resources. I'm going to point out the National Institute on Aging, NIA. If you have an elder in your life who is going through dementia or Alzheimer's, the National Institute on Aging has a lot of good research around Alzheimer's and caring for those with Alzheimer's. I know it was extremely helpful in our life as we were caring for my grandmother towards the end of her life. The National Council on Aging, there is a link in our chat that has some more information about the National Council on Aging. It's where that benefits checkup comes from, but a really good resource for everyone involved. And any government website like the Social Security Administration or other government website, whether it's your state government or federal, is going to be a good first resource for you. It may be a confusing resource, but it's a good first place to go where you can go for trusted information. Massachusetts resources, of course, we're based right here in Boston, and so we do want to give you this information. mass.gov/topics/seniors. This gives a good list of programs that different communities have for seniors, and we found that being involved in programming really does help make the senior in your life or elder safer, whether that be from financial abuse or any other types of aging, illness, anything of that nature. Being together in community with those around them is really important. So I encourage you to look at mass.gov to find some more resources for elders in our community here in Massachusetts. And really one of the last things we want to leave you with is that support is available. Earlier in today's presentation, we did drop a link in the chat for a session coming up. I believe it's May 10th, which is next week. That is being given through the Work Life office here at Harvard. And that is on having difficult conversations around elders and around supporting them. And so I highly, highly recommend checking out what more Harvard has to offer for you, because at the end of the day, like Magdalia said at the beginning, many folks in our country are going to be aging, and we want to do everything in our power to stand beside them, age gracefully together through this. And so I highly recommend checking out what more Harvard has to offer our benefits eligible employees. But know that support is available from the credit union in any way that we can help with these financial situations that we know do come up for elders as well as their caregivers. GreenPath Financial Wellness, another piece of support here via the credit union. GreenPath Financial Wellness offers free credit budget counseling, as well as counseling if you're thinking about, okay, maybe you're having an elder move in with your family, and so your budget may be looking different for the future. Talking with GreenPath about these new expenses can help ease some of that anxiety. And it is a free resource for everyone on this call today, everyone in our community, and those in your household. And this is a time when you can talk one-on-one with an accredited financial counselor, which I think is really important to find those people, right, who have the certifications, who you can trust. And GreenPath is one of those partners for us. We have a blog at the credit union, and it does have a good information about elders and some resources that are open to them. So I highly recommend checking it out. You can also subscribe and receive a once monthly email with kind of a review of the month with more information. And so this is an easy way to kind of stay up to date with anything new that may be happening. We will be putting that on our blog. And like Migdalia said in the chat, she did put this link in the chat recently, but that is our survey. Obviously, we want to make sure that this was helpful for you all, and we want to continue to get better. That is a goal of ours at the credit union, to always get better. And so we ask that you take 2 minutes to fill out our survey for us. It is, I believe, 4 questions. So we won't make you take hours of your day on this survey. But if you could, just let us know what were some things that you liked and what were some things you were hoping to hear. And so hopefully we can continue to meet those expectations for you. But that is huecu.org/survey. And of course, myself and Migdalia are not tax, legal, or investment advisors. We are not certified for that. We are here to give overviews for you all. If you want to speak to somebody particularly about your situation, please go see those professionals. Like we said, find a fiduciary, talk to them about these things, because it will be so helpful as you move forward to have somebody who knows your exact situation. And hopefully today we gave you good ideas of the roads and the paths to take towards that. If you have any questions for us after today's session, please don't hesitate to reach out to us via email. We are always happy to help in whatever way we can. And hopefully, even if we can't help, maybe we can point you in the correct direction. That's a goal of ours. And I highly recommend that you all reach out if there are questions that you have that we can help with.